speaking of buzzers, let's find out those chartbuster ideas. Naresh Mirani joining right back in to discuss the same. And Naresh, what's standing out? Is it a pick within the broader markets?
Yeah, so it's a small cap pick. The name is Sansera Enginnering. What we've seen is a consolidation phase between 950 to 1100 for the last almost 6 months. There were four attempts around that 1100 mark, and every time it failed. Yesterday, finally, the stock broke out with large volumes, the highest volume in the last 6 months. So a clean breakout done. So a buy at current levels as well as on dips anywhere closer to 1150 should be added towards a target price of 1500 in the short to medium term.
Sansera Enginnering, interesting name within the small cap universe that Naresh has picked out. So let's get in those top trading strategies going as well. Naresh, what's looking good?
So first is a buy on Bharti Airtel. The stock has broken out into new all-time highs. Stop loss at 1400, target price of 1500. Second is a buy on BPCL, which went through a decent correction and is now recovering. Should cover back to the previous highs made. A stop loss at 610, target price of 650.
Given the kind of churn that we've seen in the market, especially in the last, 1 week from those Tuesday's lows, where is it that you see leadership coming in? Because even today, what looked like a quiet start, we're now back at 23,400.
So the leadership shift in the first case for the large caps should be on the banking side, because banks have still not crossed the previous all-time highs, as well as they've been major underperformers. But we've started seeing a resilience in terms of stock prices not taking a sharp cut. We've seen a good recovery in Axis Bank. ICICI Bank is interestingly poised. Once it crosses 1150, 1170, that should be a major breakout. Similarly, sustaining 1220, Axis would be a breakout. SBI has been holding out well. HDFC Bank, which was one of the laggards, has started recovering well and is now getting closer to that 1600 mark, attempting that move. So structurally, if we look at the large caps, the leadership could come from the banking space. And secondly, whenever we see a sustaining move about 3000 for Reliance, that could be the next leader.
Okay, point taken. So banking is clearly going to take the leadership. But what about staples and FMCG? Do you think it was that 1 day, 1 week wonder wherein we saw all of those stocks rising? Because today, again, they're giving up.
So if we look at it, we started seeing a recovery in the FMCG names right after the quarterly results. So it was Dabur which started making a base. Then Marico saw a big cap up. And a lot of other names like Godrej Consumer have already been outperformers irrespective of the cycle of the rest of FMCG. So out here, the problem is we've already seen a 20-25% move in a lot of these names. So one needs to wait out for a fade off of say 5 to 8% wherein it takes a dip. The structure has changed. Finally, the trend has changed for the whole sector. But as usual, we expect it to be a slow and steady mover. So would wait for a dip of 5 to 8% to look at it. And the only name which still has not broken out is ITC. If that breaks out above 445, that would be a fresh buy.
Thanks very much for that, Naresh.
If you like this video, then like, share and subscribe to ET Now.